Deng Xiaoping urged the people in China to embrace socialism with Chinese characteristics. Are we seeing quantitative easing with Chinese characteristics?
We certainly are. I don't know what the students are going to do to help, but certainly all the other measures the Chinese have pulled out are trying to have a big difference on the stock market.
Well, Tracey, talk about how unusual this is that we see this much enthusiasm from the government, this much pressure, really, to support this communist stock market. Can I call it that? I mean, that's a crazy thing.
I think that's fair. We're seeing students from one of the most prestigious universities in China commanded to stand up and rally behind the stock market. So that is an entirely fair sentiment. Is it unusual? Not really. The Chinese government has been trying to prop up the stock market for many, many years now. Basically, their number one priority has been, well, besides staying in power, is propping up the country's economic growth. And the way they've done that, and remember, they've averaged like 10% growth for the past 20 years, is to get a lot of cheap debt either through the stock market or through the bond market. So they really encourage the country's citizens to enter the market, and now we're seeing a desperate attempt to maintain that.
Scott, do you agree with the analysis that Beijing is battling to restore calm to its stock market and, by extension, revive its own credibility, maintain its power?
Sure. I tend to see, I mean, China's stock market is about 3% of all raised capital last year and this year. It's still relatively small compared to bank loans and the bond market. And the run-up and the paper losses that people have suffered in the first few months of this year and in the last several weeks, really, that's small compared to the rest of the financial system. But certainly the government was pretty scared about the 30% drop, and therefore they decided to intervene with everything they had.
Scott, there are about 90 million individual investors in China, retail really making up the majority of equity turnover. What is the issue there with household wealth? What is the trickle down?
Yeah, well, actually, even though a lot of this is your average retail investor, Chinese are renowned for their high savings rates, and most of the money that they've put in, that's just a small percent of their overall savings. Chinese have to pay for their health care by themselves, their education. They have a lot of money sunk in real estate. And so this is somewhat of a loss for them, but they still have a lot of savings. And if the market doesn't go down further, this isn't going to have a dramatic effect on consumption or investment.
And sort of piggybacking on what Scott's saying there, that was one of the speculation why we saw that decline in commodity prices, because if you can't sell stocks, you actually have to sell to get money from somewhere, and that's why we saw it deteriorate so much.
It's all about liquidity, isn't it? Tracey, it's all about time horizon, too, when you're looking at China, because, yes, the past 4 weeks have been very debilitating for anyone who's been long in A shares. Sure. Yet, if you look at it over the past year and a half, you're still up.
You're still up, it's true, but don't forget, up until even a few weeks ago, the Chinese authorities were still encouraging people to come into the market. So you did have a bunch of people that came in right at that June 12th peak who would be suffering quite a lot. And the other flip side of that is a lot of those people would have taken out loans, margin debt, as we were talking about earlier, to fund those positions. And when the stocks start coming down, that means their pain is amplified, right? They have leveraged positions. So even though the stock market's still up for the day, a lot of people are going to be hurting quite a lot. And by the way, it's not just individual Chinese investors. A lot of companies have taken out bank loans secured against their own stocks. And that's a channel into the real economy.
Well, speaking of that, I want to piggyback off of that, Scott, and ask whether you think the stock market collapse really does have an effect on the real economy. What do you look at to make that determination?
So far, it's been pretty small effect. Really, I mean, China's economy is still slated to grow at about 7% the first half, and probably relatively similar the second half. You're going to want to look at the number of new companies that are created in May and June. Those numbers should be out soon. You're going to want to look at bank loans, investment in real estate. You're going to want to look at consumption of all types of durable goods and travel. If Chinese are still traveling, that means that they still have confidence in the overall economy.
I like those unconventional metrics, looking at how many people are traveling and how many new companies are formed.